What's going on, everybody? My name is Ryan. I'm a CPA, and today I'm going to be talking about some of these tax preparers out there who are getting these massive, huge refunds for their clients and how they're doing it. All right, so how the hell are these tax preparers getting these huge refunds? And I'm talking about five-figure refunds, multiple five-figure refunds on five-figure AGIs. So I can't tell you for sure how they're doing it, but I can definitely tell you that it's likely fraud, illegal, and a bunch of baloney. They're likely using avenues of tax credits that people don't qualify for, or maybe even deductions that people shouldn't be taking, just in the name of getting a large refund for their clients. Every year, I make this video, and I make this video because it's always relevant every year, and it might be the same video, but I put my own different twist on it each year depending on what's going on. But I get I see lots of things online about these preparers. I get questions about them, and so every year I need to make this video during tax season just to make sure you all are aware and are diligent, and make sure you don't fall for these fraudulent preparers scams. What the hell am I talking about? Well, if you haven't seen, there are people on Facebook and TikTok posting screenshots of these massive tax refunds they're getting for their clients. And like I said earlier, they're getting multiple five-figure refunds for people making just five-figure AGIs. Now, I'm not going to go through the mechanics of how refunds work. I've done that many times in the past. Just know that if you know how it works, you're going to say that don't make no sense. Not at all. So let's say you're making $50,000. You should not be getting a $40,000 refund, especially if your $50,000 income was just a couple of W-2s. Okay, there's no legal way in the tax. Maybe there's one or a couple, but if you're doing this for all of your clients, there's no way in hell that is legally possible. Okay, there might be one exception out of many and many and many, but if this is happening for all of your clients, something is wrong here. Let's say you found one of these preparers, they promised you a huge refunds, they got you a huge refunds, they get paid, you got paid, everybody's happy, right? So what are the consequences? What are the potential consequences here? So first of all, you may get audited. And by may, if you're talking about refunds of $40,000 and you're making $50,000, I would say you will very likely get audited at some point in the future. And once the tax return is filed, you have about 6 years for the IRS to be able to audit you. After that, I'm sure they can pull some other provisions out their ass and audit you after that as well. But in general, you will probably get audited. And when they audit you, they're going to find that probably none of this is legit, and they're going to claw back those refunds. That means you're going to have to pay all that money back to the IRS. Okay? And not only that, they are going to hit you with penalties and interest for the time that you had this extra money. Okay? So that's how that works. Now, since the understatement of tax liability was so high, you're going to get an additional penalty called substantial understatement of tax liability, and you may be charged criminally for a fraudulent tax return preparation. Oh, but you say you can tell them you had this tax preparer prepare my return. I had no idea. Well, this is not a time where you can claim ignorance because you signed the tax return. Okay, so that you're getting this money back, you signed for it. And I bet you with these kinds of returns, the tax preparer did not put their information at the bottom of their tax return. I bet you that they put something that says self-prepared, which means that, which implies that you yourself prepared the return and not them. Now, why is this important? Because tax preparers that do this kind of stuff will not leave their information on the return because they know it can come back and bite them in the ass. And if that happens, they won't be able to do this for very long. So they would likely put self-prepared and have you sign the return, and then you get paid, they get paid, except at some point you're going to get audited and you're going to have to pay it back. Knowing all this, how do you spot a tax preparer that is less than ethical, like one of these? First thing to look out for is if you approach a tax preparer or they approach you and the only thing they focus on is the size of your tax refunds, not the size of anything else, just the size of your tax refunds, that is a huge red flag. Because believe it or not, some people, when they prepare taxes, they owe money and some people get refunds. It's not 100% refunds all the time. So if they only focus on the size of your refunds, that kind of implies that they guarantee a tax refund, which is not even a thing. Okay, it's a thing if you're a fraudster, but it's not a thing for real tax preparers. So instead, focus on tax preparers that focus on the quality of the tax return that they prepare, or that focus on making sure errors are minimized, or they can even say they'll do their best to minimize their tax liability. That doesn't mean that they're promising you refunds. They'll do their best to make sure you take all the deductions that you qualify for, to make sure you have all the tax credits that you qualify for, just ensuring that they do their best to minimize your tax liability. There's no way anybody can guarantee anyone a refund. Another thing to look out for is a contingency fee. Now what that means is a contingency fee is a fee that you pay the tax preparer based on the amount of refund that you receive. Maybe like a percentage, so let's say a 10% of refunds fee. So you get a $20,000 refund, you pay the tax preparer $2,000. Great, you made $18,000, so $2,000 is not that big of a deal, right? Well, this is a huge red flag because it's illegal, it's unethical, it goes against all rules of the Circular 130 of the IRS tax code. It's completely unethical because this also implies that they guarantee a tax refund, and it might lead the tax preparer to do unethical things to get you a larger refund. Okay? There is no world where an ethical tax preparer would ever charge a contingency fee. The only fees that tax preparers charge are either hourly or flat or value-based. Okay, value-based meaning you have a 1040, that's a certain fee. And then maybe the Schedule C, your self-employment income, it's not a flat fee because if it's a flat fee, let's say it's always $100. But value-based means maybe your Schedule C was a very complicated business, and so they had to charge you more for that complicated business versus somebody else who had a very simple self-employment income business. They would charge them a lot less. Okay, but it's based on the work input and the work needed rather than the amount of refund that you're getting. You can flip this around too. If the tax preparer were paid a contingency fee, if you ended up owing taxes instead of getting a refund, does that mean that the taxpayer would then pay you 10% of your tax liability? Now that wouldn't make sense, right? So that means they would always get you a refund in that case, and that's actually pretty wrong. Now let's say you missed all this and you ended up working with a tax preparer and you might suspect that they are a fraudulent one. What's one thing after the fact that you can look at to see if they're fraudulent? And that one thing is to see, as mentioned before, if they actually put their tax firm name at the bottom of the tax return. Now this is not a catch-all, because some people might put down like a fake tax firm name, or they might still put their tax firm name down and still commit fraud. But one telltale sign that guarantees fraud is if they prepared your return and then they put self-prepared at the bottom. Okay, that might mean that they did something totally fraudulent and they don't want any responsibility in it. That's why they put self-prepared, and that's why you, the taxpayer, will be taking full responsibility of the return once the IRS comes back and gets you. Tax preparers, ethical tax preparers, should sign the return with their name, with their PTIN, firm name, all that stuff. And if they don't, you better just keep an eye out on those preparers. All right, that's all I got for today. Thanks for listening. If you're new here, thanks for joining us. Please consider smashing the subscribe button. Actually, you hit the subscribe button. You don't smash it. You smash the like button. And if you're a returning viewer, thank you for your support. And I'll look forward to seeing you all next week.
Like that, guess I gotta hit them with the update. Okay. I been getting to it when I'm up late. Hit it when you went the front gate. They act like that, hold up. Guess I gotta hit them with the update. Really with it, I ain't got a pump fake. Killer flow and hit them with the one take. Act like that, guess I gotta hit them with the update. Okay. I been getting to it.